Thank you, Bill Bhai. Ladies and gentlemen, matter of pride to have this personality with us. I was impressed, and I'm sure so you'll be. He's held senior positions at the UK Treasury, worked on recapitalising Royal Bank of Scotland, served as the UK representative on EU Financial Services Committee. Look at this, more impressive. Youngest member of the London Stock Exchange's Executive Committee, named among Financial News' 40, under 40 rising star in trading and technology. And listen to this more. More and more investors are sensing that Indian growth story is getting exciting, and the man behind this is, and the reason behind this is Nikhil Rathi. Ladies and gentlemen, join me in welcoming Nikhil Rathi, CEO of London Stock Exchange. Over to you, sir. So just be mindful of that.
Yeah. Thank you.
Thank you. Good luck.
Thank you. Well, thank you. Thank you for that introduction. I don't think I can be attributed with the Indian growth story, but let me try and talk a little bit about London Stock Exchange, London as a global financial centre. As Arun said, I'm Chief Executive of London Stock Exchange PLC, so that's the UK exchange. We go back 300 years in our history. We've always been very global and very international. So I want to talk a little bit about our history, some recent developments. I'll touch on Brexit, and I'll talk about some of the work we've been doing in India in the last couple of years, in particular the growth in issuance of Masala Bonds and fixed income instruments. And hopefully there'll be a bit of time for questions at the end, but if we need to catch up time, I'll be available afterwards. So let me talk a little bit about London as a financial centre. We are still ranked, number one global financial centre in the ZYEN Global Financial Centres Index. And what explains that? We have the largest capital market here in Europe. Indeed, there is more international equity invested out of London than any other global financial centre. $2 trillion of international equity out of a total of $7 trillion invested out of the asset management industry here in London. So a huge pool of liquidity and very sophisticated investor base that understands global companies. We're home to the International Forum of Sovereign Wealth Funds, the largest growing pool of international investment in the world. We have the largest foreign exchange centre in the world. Around 40% of all global foreign exchange transactions happen out of London. And that is seen now also with the growth of new currencies. Renminbi, China has chosen London as the main partner outside of Asia. Masala Bonds I will talk about later as well. So you have a very deep pool of capital, expertise, professionalism here, which I think can cater for any company in the world. We also have a legal system that is robust, treats investors of all nationalities equally, and that's also fundamental to our success. At the London Stock Exchange, we have more international companies than any other exchange in the world. 31% of companies on our market are international, and we have issuers from over 115 different countries. So there's a truly international and global pedigree in our market, and this explains why. Over half the investors in London come from outside the UK, around half of the investors. Investors from North America represent the second largest contingent, 30%, but increasingly we're seeing investors from Asia and the Middle East. And that contrasts to the US market, which are obviously very large, very deep hinterland in the US, but typically companies that invest, that raise capital in the US will attract most of the investment from US investors. People who come here will be looking to have a global profile and a global investor base. Let me talk a little bit about recent activity on our market, because I know there's been a lot of noise in the press and elsewhere about the referendum here in June last year. Actually, it's been a pretty strong year for us since July last year. Those are some of the stats. 659 equity deals raising £42 billion in 8 different currencies. A very strong stream of debt listings as well on our market. I'll pick out in particular at the bottom right, US funds have raised £5 billion, and that's quite significant. You're seeing US investors come to London to raise capital. Some of the biggest names, Bill Ackman from Pershing Square, the world's largest listed hedge fund, has moved to London earlier this year. Biopharma Credit, a very, very creative US fund which invests in pharmaceutical royalties, came here raising around $1 billion. And then emerging markets, Vietnam Enterprise Investments, one of the largest investors in Vietnam, channeling that investment from investors coming through London. We have seen the largest European offering this year, Allied Irish Bank, a Eurozone bank, raising capital here in London. Polyoskold is our next one from Russia. There's another deal in the market now, EN Plus, a Russian company that is looking to raise in excess of $1 billion. So a very international spread of companies on the market in the last 12 months. Some more examples. I'll pick out the Canadian flag. We've had a number of listings move from Toronto to London in the last year, particularly in the oil and gas sector. It's a very deep sector here, 167 oil and gas companies on our market. So you've seen companies from all over the world continue to access our platform. And what drives that? I think that the key features for us are, one, I've already mentioned, our deep international pool of capital, our legal regime, which is highly respected, access to investors from all over the world. The time zone in London is hugely attractive. So as we wake up at 8 o'clock in the morning and open our market, Asian markets are still trading. So Asian investors can participate in our market. We trade through European time and into North American time. So we're still open when the North American market opens. So global investors can congregate here. We've raised $30 billion in equity so in the first half of this year, and it looks like the second half could be even stronger. And that places us top of the European league tables. We aren't just focused on big companies, and this is something I'm going to talk about a bit more later, but we have in London the largest growth market in the world, around 1,000 companies on AIM, Alternative Investment Market, which is hugely important for many companies in this room here. Having a cheap and efficient means to access international capital for small scaling up companies. These are the companies that in any economy create the most jobs. And we have continued to see a very strong pipeline of those companies come through, not just from the UK, but including 96 companies in the last 5 years on our growth market at the London Stock Exchange. I've put some quotes there of what issuers have said. In the middle, you'll see His Excellency Minister Goyal came here to celebrate the listing of NTPC's Masala Bonds on the London market. Indeed, he launched a new market that we created, International Securities Market, ISM. We've had so many Indian issuers on it, people call it the Indian securities market, but it is firmly global and international, and we're very proud of the number of Indian issuers that have come through. I'll talk a little bit about trading volumes. We are the most liquid market in Europe. Indeed, I've been CEO of London Stock Exchange for 2 years now, and I say to my boss, they should be pleased that we've had the 3 biggest days of trading in the history of the London Stock Exchange since I've joined. But unfortunately, I can't take credit for that because 2 of the days we were around the Brexit referendum, and the 3rd biggest day for us was when Trump got elected. So, but anyway, I can try and take credit for it. But we are a very, very active market. On a typical day, you'll have many millions of transactions going through. And certainly on the day after the referendum, we had several £billion of volume in one day. And I think one very important point is, despite all the negative press, despite all of the noise, we kept the market open. We were open from 8 a.m. that day through to the end of the day. The market traded as normal. Investors who wanted to get in or get out were able to do so. And that's fundamentally important for any global exchange, which is investors need to be able to access when they want to and be able to exit when they want to. And we kept the system up and running. And we heard previously about education, about preparation. That was something that involved a huge amount of preparation to make sure we were ready. I'll talk now about some of the international work we are doing. We are now, as I mentioned, the home for the main home outside of Greater China for renminbi products, not just on the London Stock Exchange, where we have over 100 renminbi bonds, including the first ever issuance by the Chinese sovereign. They came to the market in London last year to issue in RMB in London. But also there are renminbi products that are defining the international landscape. Renminbi exchange-traded funds, renminbi derivatives that are coming to the market. And I think this is going to be one of the defining features of the next 20 to 30 years, which is how we in Western markets integrate with the very fast-growing emerging markets. In the case of China, there's some concern that Chinese growth rate might fall from 7% to 5% a year. But even at 5% a year, that over 5 years means the equivalent of an economy of Germany is being added to China. And Chinese banks are coming into global capital markets in force. India, young population, forecast to be amongst potentially the largest economy by 2050, huge infrastructure needs. And I'll talk more about that shortly. One big project which we're launching, and I had the honor of meeting the President of China when he was here in October 2015, is the connection between the Shanghai and London markets, connecting up these two markets across different time zones. To give you some sense of scale, on their busiest day, the Chinese exchanges have traded $1 trillion of liquidity. This is many, many times anything that's traded in Europe or in America. So what we're trying to do is build a connection between London and Shanghai so that our companies can access those Chinese investors, and likewise, Chinese companies can access the institutional market here in London. Chinese market is very retail-oriented, mainly private investors. Here in London, you have global institutional investors. We're making very good progress on that project as well. And in India too, we've been working very hard with the government, with the authorities, to build up an efficient and deepening channel for Indian infrastructure financing. And this builds on a long history with Indian corporates. We have just under 40 listed on our market, some very big names, and they are listed across different segments of our market. The main market amongst the largest companies, and then 14 companies on our growth market, AIM. And they access a market which is where investors very much understand emerging markets. They understand India, they understand the different sectors, and these are for companies that want to go global and want to attract a global investor base. Now let me talk a little bit about Masala Bonds. These are Indian rupee-denominated issuances which have been permitted by the RBI. What's the motivation behind this from the Indian authorities? That is to enable infrastructure to be financed in India in local currency, so foreign exchange risk rests on the investor, the international investor, not on the Indian corporate, where if there's any foreign exchange disruption, that can put stress on the corporate balance sheet. That's a very different motivation to the motivation of the Chinese authorities, which is about making renminbi an international reserve currency to compete with the US dollar. That is not the motivation of the Indian authorities. And we've been very proud to be able to host the most Masala bonds in the world and to open up this infrastructure financing, starting with HDFC for housing in India. And they've done several bonds, including partnerships with British Columbia, a province in Canada, working with them. We've also seen REC, NHAI, NTPC come to the market. So the PSUs have been coming here in force to finance roads, energy, renewable energy. We also have a number of issuers on our market which are not actually issuing in rupees, but also issuing in dollars. Axis Bank doing the first ever independently certified green bond out of India on our market to the highest standards. And what is interesting for these issuers is every time an Indian issuer is coming to the market at the moment, they are attracting new investors who had never invested in their company before, indeed had never invested in an Indian issuer before. And what are investors interested in? The growth story of India is a remarkable, fastest growing economy in the G20 in the last couple of years, incredibly young population, and the infrastructure need is extraordinary. You know, some estimates of Indian infrastructure financing need in the next 20 years amount to $7, $8, $10 trillion. The Indian capital market is very sophisticated, but probably hasn't got the capacity to finance all of that infrastructure, which is why global capital markets can make a difference. And this is what Prime Minister Modi had to say about this.
पहली बार लंदन स्टॉक एक्सचेंज में रुपी बॉन्ड लेकर के आई है दोस्तों, रुपी बॉन्ड। लेकिन अब मनोरंजन से चलना है, न सिर्फ ताजगी से चलना है, अब तो विकास की राह पर जाना है। और इसलिए जेम्स बॉन्ड, गुड बॉन्ड, रुपी बॉन्ड।
That was the previous UK Prime Minister.
90,000 people.
65. So the London Stock Exchange has been going for 300 years. Never have we had 60,000 people in a football stadium cheering a bond issuance. But Prime Minister Modi made that possible for us, and it was a very proud moment. Caused a lot of excitement, here. But we're very proud, actually, not just that there was an announcement, but that there's been very substantial follow-through, and you're seeing several $1 billion raised already. Minister Goyal was here, and he committed to raise a further $10 billion in Indian rupee issuance on the London market for Indian power, renewable energy, in the next year. Let me talk briefly about entrepreneurship, because that's something that we are profoundly passionate about. I've talked about the AIM market. We also run a program called Elite, which is a global program where we work with universities, investors, venture capitalists, professional advisors with some of the fastest growing companies in Europe and indeed now the world, to help them think about how they go from being small to scaling up to being amongst the largest. That program has been launched, as I said, in Europe, but also in Morocco, and we've just launched it in Saudi Arabia as well. I'd be delighted to talk more to you about that. Other activities we perform, we have a publication which we just launched, Companies to Inspire Africa, where we've sought out the most entrepreneurial companies in Africa. We found 343, and these are companies that have succeeded in spite of huge challenges of governance, infrastructure, human capital, access to finance, and are seeking to go global. And we are working to celebrate those entrepreneurs, and we certainly would hope to find partners which enable us to do something similar in India as well. This is a 3-phase program, our Elite program, which starts with training for founders and managers, and then some bespoke coaching to work on management practices, and then through the 3rd phase, capitalizing on that through accessing the investors, of which you have some of the biggest names in the world participating in this program, BlackRock, Fidelity, and the like. So these are some of the major initiatives we're working on, as well as working with some of the biggest companies in the world, some of the biggest markets. We spend a huge amount of time on entrepreneurs and small companies as well. I hope that Whistle Stop Tour has given you some of a sense of the work we're doing at London Stock Exchange, how we are excited about our partnerships in India in particular. And I can take any questions we have from the floor now. Thank you. Sure, sir. Yeah. Which exchange? I think we are, look, NASDAQ is often touted out as an exchange for technology companies, and obviously there is a deep pool of US companies that are strong in the technology sector, but actually as an exchange in terms of overall market capitalization, we're significantly larger. In terms of international companies, we're significantly larger, and indeed in the last couple of years in the areas of fintech, the largest public offerings in the areas of fintech, for example, have happened in London. WorldPay being one of them, a $4 billion company came 18 months ago. And I think the big difference between us and the US exchanges, and I know a lot of people will look to the US as one capital market, is the orientation. We have a very global orientation. So in London, you will typically attract companies that want to get a global profile, who want to attract investors not just from Europe, but also from Middle East, Asia, and all the North American investors as well, who invest through the London market.
Hi, my name is Deepak. I'm from Bangalore. I run an institute called Stock Market Institute. We basically train people on how not to lose money in stock markets. So I just wanted to kind of quickly understand the sense from you that as the CEO of London Stock Exchange, I just read an article which says in the UK, the government loses about £3.5 billion every year due to lack of financial literacy. So what's your thought on the financial literacy? What do you think, and what are the initiatives that London Stock Exchange has taken to ensure financial literacy to its investors? So if you could throw some light on that.
I think that's an important point. I think the London market is probably a little bit different to the Indian market, because the Indian market still has a very heavy level of individual retail investors participating. Our market is typically 85 to 90% institutions, so people who are fairly sophisticated investors investing collective money, institutional money, and 10% retail investors. But it's important to have a mix in any market to get proper price formation. So I think financial literacy is important. We have a partnership with an organization called CISI, Chartered Institute of Securities Investment, where we have digital platform to train and educate retail investors. And we do a number of roadshows right across the country here to ensure people understand what trading on the stock market means. But I think underlying your question, I think there's a very important philosophical point, and I think this is sometimes lost in the political debate and in the media. Stock markets, particularly growth markets, are about applying risk capital. Risk capital means that sometimes you will make money, sometimes you will lose money. If you lose money, it's not necessarily the fault of the market, because there could be a company that for very good reasons isn't successful. A competitor beats them, or their commercial model wasn't successful. But a portfolio approach should generally mean that over the long term, investing in a range of equities, you should benefit. And I think that one very important role that stock markets play around the world is enabling companies not just to succeed, but enabling companies to fail in an orderly and efficient fashion, to enable capital to be reallocated to more successful companies. So I would never say to somebody that if they've lost money, that it's necessarily a bad decision in the first place to have invested. It may be a bad outcome, but it's not necessarily a bad decision. So one final question. Thank you.
Yes, Mr. Rathi, can you tell us a little bit about your background to inspire the younger audience here?
Yeah, I still think I'm young, so I don't want to really. I'm getting asked this question a lot more now, and it's causing me anxiety. But I was born here in the UK. My parents moved from India, originally from Rajasthan. They moved here in the 1970s. Grew up in northwest England, in the Lake District, a very rural part of the country. Studied at Oxford. Then I joined the UK government, then joined the Treasury, the civil service. Worked on many different things there, which was a fantastic experience. Spent some time in the Prime Minister's office, number 10, for 3 years, 2 years for Tony Blair, 1 year for Gordon Brown. An incredible experience right at the center of power, seeing how big decisions are made. I came back to the Treasury to run the Financial Stability Unit during the financial crisis, when the banking system really was on its knees. And you're going to hear from Lord Gardier afterwards, and he is responsible for getting the banking system off its knees and selling it back into the international markets. And then I wanted to change, I think that the exchange and market infrastructure industry is incredibly interesting, because we are going through a huge period of globalization of capital, even though that may have been interrupted by the crisis, but now firmly moving ahead with emerging markets seeking to integrate into capital markets. We have technology moving at a very fast pace to disrupt our work. So I thought this was a very interesting sector to join, and I think the key thing is do a job that you enjoy. To anyone who's, and then the rest follows afterwards. Time for one question, or the, well, yeah, sure.
My name is Raj Gaga. I have a question regarding cryptocurrencies. What is your take on that in terms of disruptive nature and getting into the financial markets?
I think there's definitely a place for cryptocurrencies, but I think there's been a lot of rather exaggerated speculation about them in the last few weeks. So there's been this talk about ICOs, initial coin offerings, taking over from traditional initial public offerings. But I think other than ICO being a play on IPO, there's not that much similarity between what is being offered there. Because ultimately, when any company is coming to market, the investors who are investing in it require a platform where there is a degree of due diligence, there is regulatory integrity, and they can have confidence and trust in the environment on which the security is trading. And I think one of the challenges around the ICO model at the moment is that that is not there and that's not globally agreed. It might come in time, and I think there will be a part to play, particularly for smaller companies with cryptocurrency offerings. But I think it's quite a long way before we get there.
At the same time.
Bitcoins, I think, are interesting. They're interesting speculative instruments. I actually think what's more interesting is not so much Bitcoin, but it's the technology underpinning it, blockchain, distributed ledger technology. And I think that has the potential to completely disrupt financial services industries, not just our industry, but banks. If you look at the banking value chain, you can see fintech companies, particularly based on blockchain, going for every layer of the value chain. In our world of an exchange, when we trade a security, you have a typical settlement 2 days afterwards when the cash and securities change hands. You do your trade today, it'll settle on Wednesday. That 2 days around the world involves trillions of dollars of collateral moving around the world. A blockchain offers the possibility of taking that all away and being able to instantaneously, a trader in Australia can trade on the London Stock Exchange with a trader in California using a blockchain distributed ledger. The money and the securities can change almost instantaneously. So that could offer incredible global efficiency. So I think there is significant promise there. But I think also, I just go back to this other point I made at the start, which is you need to do that in a way where global regulators are comfortable. And they're still, I think, at the foothills of working out how they will regulate an environment like that.
Are you trying to work it out any further, like in terms of creating that blockchain for London Stock Exchange?
Yeah, we have. We've launched a pilot with IBM, actually, to have a blockchain register for unlisted companies. So small and medium-sized enterprises that are unlisted to have a digital register for them. So we have started, and we're looking at it in other parts of our business. We haven't yet found the magic solution that's going to enable us to do this on global scale. Because ultimately for us, we need something, because we have, as I say, investors from hundreds of different countries. We have a platform that serves issuers from 115 different countries. We need something that can work and is accepted globally. And I think that will come, but it'll take a bit more time.
Thank you.
Thank you very much. Thank you.
Please stay
Oh,
for
thank
2
you.
seconds.
Ladies and gentlemen, please give Mr. Nikhil Rathi a warm round of applause. What an amazing speech. Can I ask Mr. Ajit Toradia and Mr. Abhay Srisrimal please to come on stage? We'd like to give you a little token of our appreciation for being with us this morning. So that was the first in our series of sessions on finance. And finance is important in terms of our theme this morning. We've shown you, hopefully, how to think about a 10x growth strategy. And now we want to try and give you some ideas of how you might finance it. So to introduce that session, can I ask Mrs. Ekta Surana to come on stage, please? Thank you.